As we all know, interest rates have gone from the 2s to the 6s in the last couple years. Is this signifying the end of this housing boom? Look, I'm Daryl Eisen, your agent to help you invest for your future, and I'm gonna talk about that right now. So if we look at the grand scheme of interest rates, a 6% interest rate is still pretty darn low. Did you know in 1981 the interest rate basis was 15.8%? 15.8%. That means people were getting mortgages over that, right? It took 36 years for it to get there. In 1945, it was 1.7% was the basis point. It's now taken another 29 years to go from 15.8% into what we had in 2020, which we were basically at 0 basis points, right? So the interest rate currently isn't really that high. As a matter of fact, when I bought my first property in 2001, I bought a condo in North Park, San Diego, I had an interest rate of 6.5%. I thought that was a great rate at the time. It was an amazing rate. As a matter of fact, anything under an 8 at the time was considered great because rate had just gone from like 8s down to like 6s, and everybody was refinancing. Everybody was scrambling to get cheaper money on their houses because everyone had these higher rates, these higher mortgages from the 90s and the 80s, and they were all scrambling to do that. And then what we've seen is interest rates continue to go down over time. We've seen them go down, come back up, go down, come back up, but typically they've trended down for the last 29 years. Are they gonna start trending up? Well, here's the indicator that I think is gonna cause them to maybe start trending up for a little while, and it's inflation, right? The reason why interest rates were raised to the rates that they were in the 80s was in the late 70s and in the 80s was because of inflation. It was something the Fed did to try to curb inflation. They were trying to slow down the economy in order to make inflation, not be as high. We're in a case where we're practically in hyperinflation at this point, folks, and there doesn't seem to be an end to it. So the Fed's trying to slow things down a little bit, and they're increasing rates. What does that mean to the market overall? Well, we as a realtor, we're already seeing some real effects from this. So we're seeing a lot less buyers trying to come into the market to buy because they think they can't afford the house. And we've got some strategies that, you might find out that you actually can't afford the house. What else it's done is instead of having 20 offers on a property, now sellers are getting 3, 4, 5, maybe 6 offers. It's still pretty competitive, but it's not as competitive. People aren't having to waive like all contingencies and all this crazy stuff they were doing during the pandemic. So the good news is, as a buyer, you have a little more freedom. You actually can get a little more take back from the seller. And we'll talk, I've got another video that I'm gonna post next week. My video for next week, I post 1 video a week. I will post and I will talk about this strategy that we have, that my team uses to get your interest rate down, to make your home affordable. The nice thing is sellers are willing to work with you a little bit more. Now, one question I get from a lot of people is this the end? Is the market gonna crash? I've been waiting for the market to crash. I want houses and prices to go cut in half again. Hey folks, I got bad news for you. I don't think that's gonna happen. I really don't. I think we're gonna see a little pullback. I think we're gonna see a little slowdown, right? I think we might see prices level off a little bit. I think all those things very well could happen. I don't think we're gonna see something that happened like in 2008 because the fundamentals are way different. We had a recession in 2008 because of the housing market crash, right? This is different. We're looking at a potential recession. If some people think we're already in one, we might be. I'm pretty sure we're heading into one, but what we're looking at now is a recession caused from other factors, not from the housing market, right? We still have a supply issue. There's a major supply issue in a lot of areas of the country. We just didn't build houses for like a decade after the Great Recession. So because of that reason, because of that supply issue, I don't think prices are gonna drop dramatically. Like I said, we're still seeing multiple offers on properties. Properties aren't sitting on the market for 30, 40, 50, 60 days. I mean, some are, but those usually have something wrong with them. We're just not seeing those types of problems. So listen, I'm gonna talk about how we can strategize and help you as a buyer get in there and afford a house, a little less competitive market, this might be your time. This might be the best time. This next 6 to 12 months could be the best time that you might see in a long time to go out and buy a house. If you're an investor, I would keep my money on the sidelines for a little bit, see what happens for a couple months, and then I'd start buying houses again. That's my take. By all means, I am not a financial advisor. I am not a lawyer. It's just what I would do. As an investor right now, I'm still building houses. I'm still building houses in Florida, still building investment properties. If you want to talk to me about that, hit me up. If you go to the link in my bio, that'll take you to a list of all my different links and stuff. There's a link there for a calendar. You can go ahead and schedule a 30-minute consultation with me. Happy to talk to you, whether you're looking to buy a house, sell a house, or if you're looking to invest either in San Diego or if you're looking to invest long distance. I do both. I would be happy to talk with you, happy to help you out. Just hit me up, and everyone have a great one.